So this would be our R1. R1. And then the second one will be our R2. Right. Then to establish our support 1 and support 2, we come back to where our current market price is. Then we move slightly down and look for the most recent swing low, which in this case, if we make reference to the market price, as we go down, the most immediate swing low will be this, right?
Yeah, the green.
Yes. So that means we're going to pick a horizontal line and put at the low of the candle, which has the longest lower wick, right?
Yeah.
So we put there, and that becomes our first support. S1. See that?
Yeah.
And to draw our second support, we make reference to the first one. So we're going to use this as our basis or our reference point. So we're going to go down, and the most recent swing low we are going to encounter with reference to the first S would be where we're going to draw our S2. So in this case, where would we draw that?
The
Is
green
it
candle.
this point or at this point?
The first green one.
Which one? This one or this one?
Yeah. No, the shorter one.
This one?
It's closer to the first one we drew.
Okay. Now, now this would be equal a good one, a good support. You can as well draw it there. But then most of the times when the market price is moving towards a given direction, when it encounters a support or a resistance, there's a tendency of it trying to overlap a little. Now, the overlap is because of the volatility. It's just like, for example, something falling on the ground, all right? You expected that on landing on the ground, like that, on landing on the ground, it has to move without causing any effect on the ground, right?
Yeah.
But I believe you also have a scenario where instead of after landing on the ground, it leaves some effect on the ground. Like, for example, if you have this was the ground, that will be something like this. So if it was a ball, when the ball comes and hits the ground, it will cause some bit of a depression, right? Now that depression, remember the actual level of the ground was the other one there, but there was a little bit of a depression because of the effect of, the strength, right? At which, or the force at which the ball landed on the ground. So it caused some effect on the ground. So the effect in that nature is when you relate to a market price is what brings about this, this overlap. Like it moves a little bit past the point it is expected to encounter rejection or a support, right? So that slight one may not so much affect your drawing of these trend lines. You just need to identify the key one. That would be a minor support, right?
Okay.
We can easily identify such areas when you go to a lower time frame. But when we're drawing this trend line on the very same time frame, let's just focus on identifying the key
lows.
Swing lows and swing highs.
Swing highs, okay.
Yes, because as we are going to monitor through after drawing our second support, if you move back in history, we're going to realize that much as we have drawn our resistance and support, there are going to be points where we're going to see the market price will either slightly go above it or slightly drop below. But you need to remember that when you're drawing this support line or resistance line, you're not necessarily talking about a line. You are even talking about an area. So if we decide to use it to draw an area, we will realize that this other smaller drop below the support one is actually still covered within the support area. You see that? That's why I said it is important for you to identify the key swing lows to draw your support line. Same applies to a resistance, okay? And I'm going to show you how you draw this support and resistance area.
Okay.
So that means this one here, we may overlook at this and maybe we concentrate on this one. This is the most major, all right?
Okay.
Let's draw our second support, please. Let's draw it. We could do Just pick a horizontal line,
Mhm.
and then we bring it here. This one will be our support too, all right? Support line 2.
S2, yeah.
Take that. This is S2. There. All right, so having drawn that, we now have an area that we can decide to concentrate on as we monitor through price movement. So the area we can concentrate on is right from S2 through to R2. This is our area of focus now. See that? That would be our area of focus. So why it would be an area of focus? Because it's the area we're going to concentrate on so much to see how this market price would be moving in and about, between the different trend lines we have drawn. Now, there's another thing you need to know. After identifying your key support and resistance level, if within the very same time frame you can go ahead to identify what you would refer to as the mini support and mini resistance, you do it. All right? And when you talk about mini support and mini resistance, we talk about areas like this. We talk about areas like this point. You see that?
Okay.
Yeah, it's sort of an area of price reaction, because when you see this kind of movement, the price broke below this line, this R1, and it got supported midway before even reaching S2. So that means between R1 and S2, there is even still at a price level where the market price encounters support. It can be supported or encounters some sort of resistance. Right? So it's upon you to identify areas like this. So in this case, what you would do, you can go ahead to identify them and draw. So in this case here, since this point here is above our current price, this could as well be a resistance line, right?
Okay.
Because it's an important area. If we were to look at it as a point of a swing low, this would be a swing low in regards to this kind of movement. See this? Would be like this. If it is to go down, that is how the movement would be. Right? So this is going to be another key price level to draw a trend line. So I can pick a horizontal line and then I put it at the low at that point, right? Then I can decide to only just maybe change its color. Okay? I will take it as a line that I identified.
Again, I didn't get that. Sorry.
About which one?
The one you change the color.
Oh, wait, the way you change the color, when you pick a horizontal line, right? And then after placing it on the location you want to place it, when you release it, you will see this icon.
Okay.
There'll be a pop-up of that, something like that. Huh? Then you'll see the color will be on the pencil, the color which is shown. So it's just a matter of tapping the pencil and choosing for yourself the color which you wish to see displayed here.
Okay.
So like I just tapped there, the pencil, like this, and then I changed the color to yellow. Normally, initially it was white. So I just changed it to yellow, like that. That's how you do that. So that means midway between R1 and S1, there is also another
resistance
key price reaction point level. Okay. Now you can as well go ahead and see if still within the very same time frame. Do you see any other also in between S1 and S2? All right. So it's just a matter of seeing, okay, the immediate one I'm not seeing. Maybe in history, when I try to go back. And when I try to go back, if you can see here, this seems to be also another key support point. Do you see this area?
Yes.
It could as well be a key price level upon which the market price reacts, right? Because why we're saying that? Because we saw the market price dropped down and then came back and then again came down before breaking backward, before breaking upwards, breaking this very same level and going up. If you can see here very well. You see that?
Yeah.
There was that break of structure. If you see the market price from here, okay?
Yeah.
It came all the way and broke below and it was supported here. Then it went back and retested and then again came back and then had to go like this, as you see, this movement. Then it came back before actually now going up here. See that? The kind of movement? So that means this is also a key support area. It's also a support area. Before you reach support 2, there is this other one here. All right? So you can as well just pick a horizontal line and then you put it there. See that? There like that. So you see that? Now, in the process of drawing your key support and resistance line, midway, you also identify some other support and resistance lines. You see that? So that means this one could even be, you could call this S. This would be S. Now this one could even be now the actual S. S1, S2. Then this one becomes now your S3. Right?
Okay. So it's not a mini support.
It is a major because it is still within you identified it within the very same time frame.
Okay.
Yeah?
Yeah.
You don't have to go so far, just identify within, not so far, but just within. Just near. Then this would be actually our S. This will now be our R. This would be our R1, right? This would actually now be our
R1.
So this is R1. Then this one will change to R2. And then the other one now becomes our R3. And you're good. See that? So why you have drawn this is simple. Now you're based on what has been happening to draw and capture those areas of price reaction. Now, left to you, you are now supposed to monitor through how the market price will be faring upon arriving or touching on your different support and resistance level. In the look of things, what I could summarize, when I look at this market, this trend, I would first of all say this is a downtrend. Why? Because I've been seeing constant break of structure. As you can see, that from here, the market price dropped to this point.
Yeah.
Breaking below this R2, which initially it was a support 2. We would regard it as a support, right? It broke below that R2 to make it become a resistance, right? Then it had to come back and retest. It retested, right? Because the break of structure happened here. This was where the break of structure happened. You see that? It happened here.
Okay.
Then there was a support. So after being supported, there was a retracement. A retracement where it came and then it retested that point, which of course rejected the price successfully. Then the next movement we saw was another break of structure past this support. See that? The price had to come below and break that structure. And it got supported under S2, right? It got supported here instead. Making this other level to now change to a resistance.
Yes.
Now, what we're most likely now going to see, based on what is happening, we are seeing a build-up of a retest back to this point, right? Then
Yeah,
the next
almost.
movement probably we're going to see would be a movement that will result into a break of structure past as S1 to S2. Do you also foresee that?
No.
Yes. That
You
is what
mean
is most likely.
the tendency is there's no tendency that it can go up?
It can. It can. It's a possibility. Remember, you're predicting. You are seeing what is most likely. Now, what you're now, after drawing this now, you begin doing the analysis now. This is what we call now the analysis coming in. You get that?
Okay.
That from the look of things, the way the market price was moving, first of all, there was a break of structure. There was a first break of structure here, right? There was first break of structure there, which you could just say, we call it, let me use this as, qualify it as break of structure. Just do this like this. So you put that as a break of structure 1. This was B. This was the first break of structure. B or S. Let me change the color to white. So the first break of structure was at that point.
Okay.
Right? Yeah, that was the first break of structure, right? Then the second break of structure was here. Here. B or S. See that break of structure?
Yeah. It broke the line.
Yes. There was a break of structure below that line. So let me just do that like this.
It's also called a breakout, right?
Huh?
Is it also called a breakout?
Yeah, it's was also called a breakout.
Okay.
You can have a breakout above or below.
Okay.
So it is called a breakout. Sometimes it's called a break of structure. It's still the same thing.
Okay.
Yeah. So the next movement we're going to see if this R1 successfully succeeds in rejecting the price, right? We are going to see this movement. The movement towards S1.
1.
If S1 fails to support the price, then we're going to see another break of structure. And then the next support would be S2. So we shall see the price coming to this level and then again having what we call a retracement. So this will continue until a point is going to reach where the price level will lose momentum and the price will reverse. The market price will reverse and we shall begin seeing the same pattern of movement in the upside. Right?
Yeah.
Yeah. Now, because we are not very sure. So what happens here is this. You've drawn this line. You want to follow through the pattern of price movement, right? You're not yet very sure what is going to happen, what is happening actually. But from the movement you already detected, it's as if the price is on a down trend because of 2 consecutive breaks of structures. You get that? So it gives you a little bit of idea that probably what is happening is a movement towards the downtrend. But then with reference to where the market price is, you can't tell where the next movement would be, right? You cannot yet tell.
Yeah.
Yeah? You cannot yet tell whether the price is going to continue going down or it will build momentum and come and break past or break above R2. I mean R1. You're not yet. Now, what you're supposed to do now is you're going to wait. You're going to sit and wait. Okay? You will wait. You'll surely wait and see. If the price drops to S2, I mean S1, okay, and you see a successful support. A successful support is this kind of support where you see a candle forms and open and closes above the same support. You see? The first successful support is here. The candle comes, opens and closes above, another green candle opens and closes above, and then the next movement is this. When it comes here, the candle drops, open and closes above the support, and then you see that movement. So if you see the same happening here, after this market price coming back here, it is successfully supported, then you see the candle keeps on building up above the support. Yes, you can be rest assured that the price is going to go up. Okay? You can be sure. So meaning this support is where you are looking out for entry opportunities.
So the S1.
Yes, S1. So you're waiting for the market price to drop to your S1 again before you can buy. Now, if you wait for this, for the market price to drop at this point, you're going to buy, right? Then this distance from where you're going to buy from to support to, this would be the percentage of the call drop you're going to set on your robot. So to even be more safer, you will measure this distance, the percentage you get, then you measure this one here, the percentage you get, you see how much you have. If it is 2%, that is small enough, you can set it. If it is 3%, it is small. But if it is more than 3, let's say it is 5 or 6 or above, you can decide to distribute. You can decide to divide it into 2 or 3.
Okay.
All right. So can you come on? Okay. So let's just try to do the measurement and see. Like if the distance, if this is where you are setting your preset, okay, you're waiting for the market price to drop all the way to S1 before you can buy. So that means you're gonna set this price 0.6263 as your preset, right? Yeah. So you're waiting for the price to drop there. Then if the market price drops to your preset and the robot buys, you now want to be safer. You want to make sure that in case the robot buys and S1 is unable to support the price successfully as you are thought of, you have to be prepared so that you have at least a percentage drop where the robot is going to buy again if it drops below the support S1. So that's where you measure this distance to get the percentage there. So you're just going to measure this distance from here. Are you with me?
Yeah, I'm with you. That's where we get the margin call, right?
Yeah, so you're going to measure this distance up to here. So you see this distance is about 11%, right? It's about 11%. Now, this 11% you can decide to divide into 3.
Use it, okay.
Into 3, which would be roughly about 3 point something. Let's assume that the 3, no, let's assume maybe 4. Let's assume it is 4% each. So if you distribute it into 3 margin calls, that means every 4% market price drop, the robot will be buying.
Okay.
So it will be buying that. Okay.
So we have 3 margin calls already.
Yes. Or if you wanted to establish like 4, you'll divide the 11% by 4, okay, right? Which would be roughly about 3%, right? Let's assume that is at 3%. 3%.
We don't have to move from this time frame, right? We are still working on this
Yeah,
one.
we are still on the same time frame. Yes, we are still on the time frame. Same time frame. You don't move out of it. Okay? You don't move out of it. Okay? I will tell you reason why. I'll also show you when you decide to go to a lower time frame, okay, what you would do. The alternative we are making here is that we have analyzed from the very same time frame. Now we want to also make entry on the very same time frame. Okay? That means if we want to make entry on the same time frame, this is what we do. This will be our preset. Okay? Then this would be the margin call drop percentage. Yeah. So whatever percentage we get, we divide it by the number of margin calls to establish.
Okay.
Okay. We want to establish. So meaning. Okay, so that means. What you're going to do is you're going to wait after distributing the 11% on 4 call margins.
Yeah.
You're going to wait. If the robot buys off all the 4 margin calls, all right, you will quickly come back on your chart. Remember, you've already drawn, right? You will come back on your coin and again measure this distance.
From S1 to S2.
Exactly. Right? So they say, okay, since this the robot has bought all this, that means, of course, the price will come here. You're going to expect some moment of retracement, right?
Yeah.
Back to S1. Now, that means in the next movement, you should expect this kind of, if it is a continuation of the downtrend, you should expect another movement of this nature, right? That is what you should expect, that there will be another movement of this nature, which happened here, right? So you're going to make sure that you measure this distance again.
In this procedure, if you see that there's like, before it goes down again, there's a retracement, you said. Retracement.
Yep.
Then it would have sold.
Yes. Now,
what ending?
It depends on the percentage.
Like if you divided it into 5 or into 4.
Because the movement we're talking about is this movement.
Yeah.
So in the attempt to retrace, if you were using the double up, or you are using the Fibonacci, trust me, by the time it is retracing here, it will sell. Depending also on the percentage take profit you set. Okay. If it is bigger, that means it will not. But if it is 1.52%, it would have sold, surely.
Yeah. Okay.
Because every other time it is making a buy order, remember, it will be narrowing the gap between the average price and the current price. That price at which it would have bought, that is, it will be reducing the gaps in there. You understand? So that means by the time it is retracing here, it would surely sell. It would have surely sold already. Okay? But so in case
that's the advantage of having a lower percentage. Right?
Exactly.
Okay.
Because even amidst doing that, as the robot is buying the different level, it is still using more fund. So that means when if you set a smaller TP, you still get some reasonable profit. Okay?
Yeah.
Because more fund would have been put in the market on the coin.
Yeah.
You understand? So it's just a matter of you knowing exactly what to do. If you understand that aspect very well, then it becomes easier for you. You can easily set this. Okay?
Okay.
Right? Now, if you are committed, for example, if you are so committed and maybe you don't have the time, what you could do is, if you use the preset price, which would be at this level, you can measure this distance and open the margin calls at once. You can just establish the number of margin calls you want, and then the percentage from this point to this point is what you distribute within those margin calls.
All right.
You get that? So, which in this case, that would be about what? If you were to measure, let's see. we'll do, if you measure again this from this point to this, that would be another 9. So 9 plus, or roughly 9, 11.8 plus 9.7, that's
You didn't measure
roughly,
it to the, you didn't measure it to the line.
okay, that's 20, that's roughly 22%.
No, it's
So
10.
meaning you can literally, sorry?
It's
Yes.
10.
So meaning literally what you could do, you can even decide to just measure this distance all the way, which is 22.4. Then you decide, okay, I want how many call margins? They say I want
Where did you
7.
get 22?
You add 11.8 plus 10.6.
Okay.
Yeah. That is the distance, the total distance from there to here. Just in case. All right. You open just in case. In case it doesn't fare out as you expect and it drops to that much, it is okay, because sometimes you can be busy. You may not have the time to come back and
Come
monitor
back.
through.
Yeah.
So if you can establish that at once, you're good, because you want to take advantage of any movement in the market price. You don't want this retracement, which maybe would result into still your robot not selling anything, and then you have this other massive move again to this support 2, all right, upper support 3, I mean. So you want to take advantage of every market price drop. Okay, so you just measure that distance and establish. If it buys all, that's fine. If it doesn't buy all, you have nothing to lose. Okay, you really have nothing to lose.
This
Right?
one you just made now, this drawing, that's what the measurement you just made from S1 to, no, from,
S2, S3.
yeah, from
Uh,
the 22, the one you made 22 point something.
oh, that is now from here, from
Yeah.
S1 all the way to S3.
S3, okay. That's what I mean.
Yes.
That's, you know, remember I asked you, what do you work apart from this? Do you do any other job? I asked you last time.
Oh, yes. Yeah.
Because you have time to um, to watch the markets. You just said it that if you don't have time to do, you may not have time to come back to check on the market. So you just do it once.
Yes, and the beauty of, anyway, not even that. You see the good thing of drawing, of establishing this trend line, or having a prior analysis and just waiting for the market price to play along. Okay, because this is just like, it's just like you've already drawn a roadmap. So you want to just see how the price is going to play along your roadmap, right? Your
Yeah.
road, you know. So you only want to wait for opportunity to buy. If you're a preset price, you set your preset at a support move.
All right.
So just like I was saying, the essence of you drawing this is just to, so that you don't waste time doing analysis all the time. Okay, you just want to
Yeah.
see how the price will be moving around these points. Now, the other thing is, when the price finally breaks out of the area you are demarcated to watch the market price move through, let's assume it breaks above here. Let's take it for instance that now the price is no longer trading within the area you have demarcated, and it has, let's say for instance, it has now moved above, it is off this area, now it is trading above. You're going to do the same. You're going to still capture the movement. You know, demarcate, locate your areas and then demarcate your positions or movement. Okay, the path. Just draw it there. If it breaks below, do the same. Just draw those lines, because you want to monitor through. Okay? Because sometimes the price can move out of the area you had actually partitioned to watch through its price, its movement. So if it goes above, you're going to do the same thing you did here. If it comes below, you're going to do the same thing you did here.
You have to come back
Now,
to analyze it.
yes, just draw these lines, draw your trend line, and then your work is only to monitor. You're waiting for the opportunities. You have to wait for the market to come to you. You don't follow it. Okay?
Okay.
Now, if you're a current price signal, if you're a current price trader, you love trading the current price like I do. It's just a matter of measuring this distance. You measure this distance from the market price to the first resistance line you encounter. The percentage there is your take profit.
Profit.
Then from the market price to the first support,
So first margin call.
the percentage you get there becomes your margin call. Yes, it can be the first margin call if it is the margin is not so big. Okay, let's say if it is 1, 2, 3%, you can establish that as your first margin to have at least two call margins. Like for instance, to use the current price, we add resistance 1. Measure the distance between our market price to our first support established, which is around 5, I think, 5 point something. That's 5.1. Okay.
Yeah.
That's 5.1. So that means
5.1, yeah.
Yes, that's more than 3. So what you're going to do, you're going to open. Bye. You're going to establish 2 margin calls. Yeah. Here, the margin call drop we see here is 5%. Right? So what you could simply do is just divide the 5 into 2. So that you have first call would be 2.5%. Second call would be 2.5%. So you have 2 call margins, with each having a drop of 2.5. You understand?
Now I see where you get the margin call drops you give us and the signal.
Yes.
Okay.
So that is how that comes about. And so that is analysis on the same time frame. Now, if you want to look out for a prior or earlier trade entry opportunities, after drawing your trend lines on the same time frame or on a bigger time frame like we have done in 1 hour, you now know your resistance 1, you know your resistance 2 and resistance 3. You know your support 1, support 2, and support 3. Now, your work is to monitor through how the price is going to be moving within the different support and resistance lines of drawn, right? And what you're looking out for, an opportunity where the price will be within your support level so that you can enter, right? And take profit to the nearest resistance. That's right. Now, you can decide to go to a lower time frame and now look out for those earlier entry opportunities. You know your market price, you know your first support, you know your first resistance. Now, in between here, you may be having a mini support or a mini resistance, which you can base on to make entry and make exit or establish your take profit, which you're unable to see when you're on the very same time frame. So to identify that, you simply go to a lower time frame. If you don't find it there, then that means what you have drawn here is okay. You can just wait for the market price to drop, or you can decide to enter at the market price. Right? Are we together?
You say I can decide to wait for the preset or enter as a current price.
Yes.
Okay.
You can decide to enter at preset, or you can decide to enter at current price. Now, but I also said that if you're not comfortable in making entry on the very same time frame, you can simply go to a lower time frame and identify and try to see through if you'll find any mini support or mini resistance. Yes. Okay. Because at this point, you can enter at current price and take profit to that resistance, measure this for your margin call drops, but you can decide to go there and now measure the actual margin call drops in the lower time frame. The actual margin call drops based on whether you're going to identify the mini support or not, right? If you identify, then you're going to be measuring exactly. But if you don't find it, then you base on this 5% divided by 2, you just have 2.5 for the different call margins, right?
Right.
So let's come to a 15 minutes time frame. Now you are in a 15 minutes time frame. You see, this is where our market price is.
Okay.
See that? You see where our market price is? Now,
Yeah.
this is the area we are currently looking at. This is the area.
Yeah.
Now that's the area. That's the area. And in the look of things, I believe you can tell that we have the market price here. Okay?
Yeah.
We have a resistance there. We have a support here. Is it true?
Yeah. Mini support and mini resistance.
Mini support, mini resistance.
Yeah.
Right? Now,
Yeah.
it means at this point, you can even equally now do that demarcation. Establish your first support there. Pick a horizontal ray, put on your mini resistance. Now there, you can decide now to enter at current price if you wish to. Measure your distance, measure the difference between the current price to your first mini
Price.
resistance.
Mini yeah, resistance.
And that would be your take
Profit.
profit.
First take profit.
First take profit. Then measure distance from current price to first mini support. The percentage you get there is the margin call drop.
Margin call
For the
drop.
first call.
Okay.
Right? So
Right.
let's see what that percentage would be. You measure from there to this point. This is actually 2.5. Then you also have that from there to this point. That's roughly 2.9. So you have now exact and precise margin call drop percentages to establish for your first call, which in this case would be this, and then the second call would be that.
Yeah.
See that?
Yeah. That's in
Good.
between. That's in between the current price and the S1. We are still dealing with
Exactly.
the
Yes.
lower time
Between the
frame.
current price, between the current price and the first support, and then between the first support and the second support, which is the major support one in our higher time frame. Because so I hope that is okay. You understood that part very well.
Yeah, because I saw you were moving in and you weren't. I wasn't hearing your voice.
Yeah. So it's that's how you go about this. So you find that from a bigger time frame, you help just establish those support and resistance. Then you can possibly go to a lower time frame like this and even narrow your analysis to a specific area. Because with doing that, you're trying to identify entry opportunities earlier than what you're seeing in the bigger time frame, because there are other opportunities that hides out or they may be hidden in the higher time frame because you're waiting for something, in the bigger time frame. But when you go to a more smaller time frame, you can identify those opportunities earlier. Just
Yeah.
like we said, if you are in the 1 hour, you are going to assume the margin call drops. Yeah, you just assume it and then distribute. You say, okay, it is 5%. Now let me divide it into two. Let me have first call 2.5, second call 2.5. But now here you can go specific. You can now go specific and say, okay, from my point of entry, which is my current market price, if I enter current price, I can decide to measure the distance from the current price to my first mini support that I have identified. Okay? You do that to the first mini support that I have identified. Then I establish that percentage as my first call drop. Okay? Then the second call drop for the second call would come when you measure the distance from the first mini support to actually the major support, which is S1, which we identified in the higher time frame. And then you're good. You're basically good. Okay? Say that. Hope that is clear.
Yeah, I see
Now,
that.
sometimes, yeah, sometimes what I do recommend is that instead of sometimes, even taking the take profit to measuring the take profit to the exact resistance, you can even decide to take 3/4. And 3/4 mean you actually don't even reach the resistance line. You just exit midway or earlier before actually reaching the what? You can even take 3/4 around here. 2% is okay. 1.5% is okay, right? You may not necessarily take the whole percentage up to the resistance because you're looking at a scenario of exiting the market earlier, because since you don't control the market, there are moments where the price may rise and it fails to reach your resistance line just because of the different events that happens in the market. Then you'll see a quick shift in the market direction. Now, if you had set a very big take profit, that means this time the market may even still again go against you before regaining at a later time. Okay? Other than you exiting the market, now you are remaining or staying in the market longer because of wanting big take profits. You get that? So, but if you take 3/4, it is better, or a half, that is still even better. You rather exit and again enter if at all another opportunity presents itself, other than entering, waiting for too long, and then you wait in vain. Okay? Or you wait for so long. You understand?
Which is always been my case. I'm too greedy.
I know. Wanting to make so much.
Yeah. I'm too greedy. I think I have to change that.
Yeah. So basically, that is really how you go about this. That's how you do the analysis using the trend. Now, most of the times, what you should know is, because we're still basing on the trend line, we say that you don't use a single tool or a single analytical tool as a standalone tool to make decisions of trading, or to make entry opportunities. I mean, trade entry opportunities, or to identify trade entry opportunities. So the best you could do is you need to add another indicator. Okay, you need to add something to back up, right? That is just like more of giving a testimony, and then you have someone to back you up as a witness. It carries more weight. So here is where now you introduce in, or you incorporate another support tool to see if at all the decision you're making is actually gonna be in your favor, or it may be in your favor but at a later time, or you just completely have to wait because it's against your analysis. So you have to add another indicator. But for now, basing on just the support and resistance, that is how you go about it. Now, to even increase more and add more flavor, you would add another indicator. Which indicator we're not going to talk about today yet. That time is going to come when we're going to combine now we're going to do real price action combined with the indicator. Then now we make very informed decision. Everything will make a lot of sense. Okay? Because there are those indicators that once you add and it supports your analysis, you feel like, wow, this is it. This is absolutely it. So that is basically that. So slow but surely we shall get there.
All right.
So basically that is it. So what you're going to do for me, then the assignment for today, it's going to be, one, you're going to identify any coin of your choice. Pick any coin of your choice. Okay? Pick any coin of your choice. And then draw for me on the 1 hour time frame. Draw for me, identify and draw 3 key resistance lines. Identify and draw also 3 key support lines. Okay? While following what I just guided you on. 1, locating your market price. 2, using your market price as a reference point to establish your first support and first resistance. And then now using the first support and first resistance to draw the second support and second resistance respectively, in that order. Okay? So you're going to do that and screenshot. Also, as you do that, measure for me two scenarios. One, if you decide to enter at current price, what would be your TP, the first TP, and the first margin, the margin call drop, the first measurements you make, margin call drop. Okay? You also have to let me know that. Then the second scenario.
How do you write this R1, R2 that you've written? Like, how do you put in the tests?
You come to the drawing tool and look for what we call the call out. It is under the animation annotations. It's here. It's under the annotation. It's called the call out.
Okay.
Yeah, you just put it on your favorite. So what you only do is you tap on it once and you take it to the very point you want to extend it from. Like, for example, if I can tap this, I tap on it once, then I come, if I want to put it, for example, here, if I want to put it here, I will drag the cursor and put and bring it exactly at the point I want to put the pointer at, the pointer. Then I will tap on the screen and I'll release it there. Then I just try to drag it, slightly. Like, for example, I'll tap like this. Then I hold on it and try to drag it to any direction I want. You see that?
Yeah.
Just do that like that. If I want it up there, I want it down here, I want it completely far away, you can do it.
You are holding it, tap and hold.
Yeah, you tap and hold. Then you now drag. You just slide your fingers on the screen as you move it about.
Okay.
Then after taking it to a location where you want the writings to be, then you again tap on your screen once and you release it there. Then it will give you provision for writing whatever you want to write. Like that.
Okay.
Maybe you try it out. Maybe you do that. You try it out as I see.
I'll try that.